All right, hi everyone. Welcome to today's pre-market live analysis session brought to you by IC Markets. I trust you've all had a great weekend as well, right? And let's as we move on into the second week of October, right? We've got quite a few things uh, lined up on the economic calendar for this week as well, right? But before we start, right, please take note of the disclaimer, right? This is marketing communication and does not contain and should not be construed as containing investment advice and no investment recommendation or an offer of or solicitation for transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right, hi Renata. All right, good evening. Yes, yeah, definitely we'll cover cable, Aussie, dollar, yen as well, right? But of course, we'll start the analysis with the dollar index, right? Once we'll take a quick look at the economic calendar for this week, we'll start the analysis on the dollar index and then we'll work our way down through the majors like the cable, Aussie, and dollar yen. All right, sure, great to see the request come in as well. Right. So my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. Uh, there's quite a few things on the calendar this week, but I just want to bring your attention to the RBNZ monetary policy meeting that's going to take place on Wednesday, 9th of October. We've also got the FOMC meetings up on when the minutes rather of the FOMC meeting will be released as well. That's also on Wednesday, and of course we've got CPI data out on Thursday. Right, so here's the calendar for this week. Right, there's quite a few things going on. Right, as I mentioned, in addition to the RBNZ policy meeting, US inflation, as well as the FOMC meeting. So we've also got the policy meeting minutes that will be released by the RBA. That's on Tuesday, 12:30 a.m. We've also got UK GDP data, Canadian employment data, as well as PPI data out of the US as well. Right, so just looking quickly at the RBNZ expectations, right? Expectations for the official cash rate. It currently stands at 5.25%, and at this time, at the previous meeting, they made a surprise cut as well. They cut by 25 basis points to bring it down to 5.25%. And at this week's meeting, they're looking to cut another 50 basis points to bring it down to 4.75%. So we can see that the RBNZ has indeed turned pretty dovish, right? And if we do see 50 basis point rate cut take place on Wednesday, and if you see that policy action be accompanied by a rate statement that's pretty dovish, we can expect strong selling pressures for the Kiwi, right? Then we've also got the meeting minutes for the FOMC meeting that took place in September. That's out at 6 p.m. GMT time on Wednesday. Right? If we do see further, this minutes as well will give us further insights into the meeting that took place on 18th of September, right? So should we see the minutes convey a very dovish communication as well, we are quite likely to see the dollar see some selling pressures on Wednesday. Right? And of course, Thursday at 12:30 p.m. GMT, CPI and core CPI will be released, where we are expecting the headline CPI figure to ease from 2.5% to 2.3%, and we're also expecting the core reading to ease further as well. So should we see inflationary pressures in the US dissipate even further, right, that's quite likely going to function as a bearish catalyst for the dollar as well. And of course, we have PPI data on Friday. That's at 12:30 p.m. GMT, right? That's the level of inflation in the wholesale sector. And of course, should we see inflationary pressures for this sector continue to dissipate even further, right? That's also going to quite likely going to function as an additional bearish catalyst for the dollar. And take note, we've got UK GDP data and Canadian employment data out on Friday, October the 11th as well. Right, hi Ryan, good to see you. Yes, definitely we'll cover the pound and Aussie as well. Great. All right, okay, so let's dive into the charts and trading view, and of course start the analysis with the dollar index, right? So we can see here, right, I'm on a daily time frame for the dollar index, and we can see that this index has actually reversed very strongly at the end of September, and has had a very strong counter trend rally in October, right? So we can see what was in a strong downtrend that began on 28th of June, right? Dollar index reversing from about 106.10 to drop as low as 100.15, right? We had seen a series of higher lows higher highs, right? We actually saw it trading in a nice downtrend, as well as trading underneath a prior descending trend line, right? So we can see that this descending trend line was taken out very cleanly last Wednesday, right? We saw a nice bullish break above this descending trend line here, right? So not only did we see the dollar index break out of this descending trend line, it also broke above a previous resistance level as well, right? There's a strong resistance level here, right, at 101.73, which now can be used as a potential support level, right? Actually, when I drag this level all the way across here, you can see this is actually a nice overlap level. This level at 101.77 previously functioned as support on Wednesday, 14th of December, after which it proceeded to function as resistance on the 2nd and the 12th of September, thus creating a very nice overlap support level, which also got taken out, right? So we also see this overlap resistance get taken out on Thursday, right? So we have seen a very strong bullish reversal take place, right? We see this strong uptrend for the dollar index, right? First of all, breaking out of the descending trend line. That occurred on Wednesday, 2nd of October, and then on 3rd of October, Thursday, it also broke above what was previously an overlap resistance, right, at 101.77. So we saw a very strong bullish move for the dollar index last week, and perhaps that momentum is quite likely going to continue uh, for the first half of this week, right? Remember, have we have inflation data out of the US that's out on Thursday and Friday, right? CPI data and PPI data out on Thursday and Friday. We also have the FOMC meeting out on Wednesday as well. So Monday and Tuesday is a quiet calendar, right? So perhaps we can see the dollar continue to remain in demand in the first half of the week, right? And then in the second half of the week, when we see the minutes and the inflation data being released, these events could then potentially function as a bearish catalyst for the dollar. Right, so take note, in the first half of the week, right, we are quite likely to see demand for the dollar remain strong. So that potentially could push the dollar index up towards this pivot level here. This pivot level here at 103.24 is actually a nice overlap resistance, right? We can see that this level here previously functioned as support on 22nd of March, after which it proceeded to function as resistance on the 9th of August, creating this overlap level here, which we have identified as the pivot. Not only is this an overlap resistance, we can also see that there's a 50% Fibonacci retracement, right? We found this retracement by starting from this high here, this swing high on the 28th of June, going down to this swing low here on Friday, 27th of September. We can see that the 50% retracement level aligns pretty well with the pivot at 103.24. Right, let me see if there's any other retracement levels that we could use. Oh, actually, we can use the 78.6 as well. Let's keep 50 and 78.6, because we can see that the 78.6% retracement. Actually, wait, let me just tidy up the chart first. As we can also see, the 78.6% Fibonacci retracement aligned pretty well with the first resistance. And you can see here the first resistance is also an overlap resistance level. Once again, we see the dollar index previously functioning as support here on 12th of June, and after which it proceeded to function as resistance on the 30th of July, thus creating this overlap level that has the presence of a 78.6% Fibonacci retracement. Right, so these are the key support and resistance levels for the dollar index for this week. Right, this is on the daily time frame. Remember, we've seen a very strong bullish reversal for the dollar index, as not only did it break out of a descending trend line last Wednesday, right, we saw it break out of this descending trend line last Friday. Then we also saw it break out of this overlap resistance last Thursday as well, right? So this overlap resistance also get taken out. Very strong bullish move for the dollar index, and perhaps the bullish momentum could push it up towards this pivot level here at 103.24 for the first couple of days, right? So pivot level at 103.24 is an overlap resistance that has the presence of a 50% Fibonacci retracement. right? So before we see the relevant US data being released, right, the FOMC minutes, inflation data being released on the second half of the week, perhaps demand for the dollar is going to remain strong. So that's going to push, potentially keep the dollar index elevated, and it could drive it up towards this pivot level here at 103.24, right? And first support, of course, is at 101.77. It's a significant overlap support. And of course, first resistance is at 104.68, which is also another overlap resistance that's accompanied by the 78.6% Fibonacci retracement. All right, now let's work our way down to the majors, right? We'll cover the euro, cable, dollar, yen, Aussie, right? And then we'll move on over to commodities, touch on the indices as well. All right, okay, let's take a quick look at euro. Right, so of course, if the dollar index had made a strong bullish reversal last week, then of course we have seen the euro tumble quite hard as well. And not only that, actually, if you look at it, the euro has broken out of what was a pretty decent bullish channel as well, right? I would say that's a pretty decent. There was a pretty decent bullish channel last week, right? So this bullish channel got taken out, right? Last week we saw a significant shift in momentum for the euro, right? Last week on Tuesday, the euro breaking underneath the lower trend line of this bullish channel, and then it just continued to drop for the remainder of the week as well, right? It does look like it has found support at the pivot. Right, if you look at it, this level here at 1.0948 is a nice overlap support that is also accompanied by a 50% Fibonacci retracement. So we found this retracement by starting from this swing low here on the 14th of June, going up to the swing high here on the 25th of September. We can see that the 50% retracement aligns pretty well, right, with the pivot, which is an overlap support. Right, so previously this level functioned as resistance here, like a swing high resistance in mid-July, resistance once more in the first half of August, and then support on Friday 16th of September, and it looks to have found support last week as well, 7th of October. So this creates a very nice overlap level that aligns with the 50% retracement. It's a nice overlap support that we have identified as the pivot. So we've seen the euro tumble very strongly last week, right? Reversing from about 1.1200 all the way down to about 1.0950, right? Very strong, significant demand for the dollar, of course, has caused the euro to tumble hard as well. And it looks like it may have found support last week and the pivot here, bouncing a little higher, retracing a little higher. However, right, we could see demand for the dollar remain elevated this week, right? Especially the first half of the week, maybe the first couple of days, demand for the dollar is going to remain strong. So if that were to happen, we are quite likely to see the dollar index rise up towards the pivot. And of course, for the euro, that means we are quite likely to see this pivot level here being tested quite significantly this week as well, right? This pivot level here is an overlap support that is going to be tested quite significantly. We may see it stabilize here, but if we do see the bearish breakout take place, then of course we can expect the euro to slide lower, and then the next support for the euro comes in at 1.0786, right? This is a nice swing low support that took place on Thursday 1st of August, and that's also accompanied by a Fibonacci retracement, right, at 78.6%. Right, a little bit higher up in terms of resistance, there's another nice overlap resistance at 1.1110, right? Once again, this level previously functioned as resistance on Friday 6th of September, after which it proceeded to function as support in the second half of September as well, so creating a very nice overlap level. So this is a overlap resistance at 1.1110. Right, and also let's see if there's anything else here. Yeah, we've also run a Fibonacci retracement on this downtrend here, starting from this swing high on Wednesday 25th of September, going down to this low here on Friday 60th of September. We can see there's a 61.8% retracement. Let me see if I can adjust the labeling, make it a little bit more visible. Right, we have the 61.8% retracement accompanying this overlap level at 1.1110 as well, right? So pretty strong resistance barrier here. Strong overlap support at 1.0948, which looks to be is probably going to be tested this week. And this overlap level also is accompanied by a 50% Fibonacci retracement. Right, and of course, first support is this swing low at 1.0786, which occurred on Thursday, 1st of August, and that's also accompanied by Fibonacci retracement at 78.6%. All right, okay, now let's take a look at the cable. Right, we should expect similar market structure as well. Right, you can see between the euro and the cable as well, we see pretty similar market structure, and we also saw the cable break out of also what was a pretty decent bullish channel last week as well. Right, we had a pretty decent bullish channel here. Right, which got taken out very cleanly last Thursday. Right, we see it trading nice here, series of higher highs, higher lows, and now we've seen it break out of this bearish channel. We've not made a new low just yet, but perhaps we're seeing especially if demand for the dollar remains strong in the first couple of days, we can expect this currency pair to drop down towards the pivot here. The pivot at 1.3008 is an overlap support that is accompanied by 50% Fibonacci retracement. So this retracement level was found by starting from here, running the retracement from this swing low on the 8th of August, going up to the swing high on the 26th of September. We can see that 50% retracement level aligns pretty close to this overlap support. This overlap support previously functioned as a nice swing high resistance on 18th of July, after which it proceeded to function as a nice swing low support on the 11th of September. So this creates a nice overlap level, right, that has been identified as the pivot. So we can probably expect cable to drop down towards this level here, right, especially if demand for the dollar continues to be strong. Right, if we do see the dollar index pushing higher towards its pivot at 103.24, this is an overlap resistance, then of course we're quite likely to see the cable drop down towards its own pivot at 1.3008, which is an overlap support that's accompanied by the 50% Fibonacci retracement. Oops. Right, first resistance at 1.3415, right, it's simply this is just simply a swing high resistance, right, it's occurred on 26th of September, and for the first support, that's 1.2686. This is a nice swing low support that has taken place in August. Right, I think we can probably run one more Fibonacci retracement as well. I'm going to try something out, running a retracement from here. This swing low that occurred on Monday, 22nd of April, going up to the swing high here on 26th of September. Right, let's pull up all the fibs. Right, I can see that the 38.2% retracement aligns very well with the pivot, right, and we can see a 61.8% sitting quite close to the swing low that occurred on the 7th, 6th and 7th of August. So let's keep 38 and 61% here. So you can see here this pivot level at 1.3008, not only is it accompanied by 50% retracement, Fibonacci retracement is also accompanied by a 38.2% Fibonacci retracement as well. So this is identifying a pretty strong support zone for the cable, and further a little bit below, this swing low support that has taken place on 7th of August is accompanied by a 61.8% retracement level as well, right, pretty close to it, right, so highlighting another strong potential support zone for the cable here. Right, so these are the key levels for this currency pair, and of course if you expect demand for the dollar to remain strong for the first couple of days, we can definitely expect this currency pair to drop down towards its pivot level here at 1.3008, which is an overlap support that is accompanied by two Fibonacci retracements at 38% and 50%. Right, and remember, perhaps in the second half of the week, right, once we get data for US CPI, PPI, right, and if those two data points continue to show inflation dissipate further in the US, right, that could be a potential bearish catalyst for the US dollar. So, and that in turn could quite likely function as a nice tailwind for the cable as well. So perhaps first couple of days this currency pair will drop down towards the pivot here, right, and probably stabilize around this level. And then in the second half, as we get the latest inflation data out of the US, we could potentially see this currency pair make a nice bounce as well, right? Something similar to the euro, right? You can expect the euro to drop lower as well in the first couple of days, and then stabilize around the pivot, close to the pivot here, maybe a little bit below. And then if we do see inflation continuing to come in soft in in America, right, then we can expect this currency pair to probably stabilize and maybe stage a nice rebound as well. Right, okay, so then we've also had request for Aussie and dollar yen. All right, so let's take a look at dollar yen, Aussie, and then take a look at Kiwi as well, since of course we've got the RBNZ coming up on Wednesday. All right, let's take a look at dollar yen. Right, so of course, if we've seen a nice bullish reversal for the dollar index, right, we can also see the dollar yen in a very similar market structure as well, breaking out of a prior descending trend line, right? Okay, not the best descending trend line for the dollar yen here, but you can see it was trading in a making a series of higher lows, lower lows, trading underneath this bearish or rather trading underneath this descending trend line, right? And it broke out of this descending trend line on Friday 20th of September, and after which it also broke out of this swing high resistance that occurred on 3rd of September, right? This swing high resistance occurred on the 3rd of September, and last Friday we saw a very nice clean break above this level as well. So once again, we're seeing very strong bullish momentum, dollar yen breaking out of a prolonged downtrend, first breaking out of the descending trend line on 20th of September 2 Fridays ago, and then last Friday breaking above a significant swing high resistance as well, and we're seeing a lot of strong bullish momentum for this currency pair, right? So should we see demand for the dollar remain strong, right, and of course and we are quite likely to see dollar yen push higher as well, then it's approaching its pivot. This pivot level at 149.27 is actually another swing high resistance, right, that's occurred here on Friday 16th of August. So it's a nice swing high resistance that's very likely going to be tested this week, and we may even see a potential bullish break above this pivot level here, right? If we do see this bullish momentum remain intact for dollar yen, we may see, right, last Friday it took out this swing high resistance at 146.85. Now what was previously a swing high resistance can potentially function as a pullback support, so that's how the first support at 146.85 has been identified. The pivot level at 149.27 is actually a swing high resistance that occurred on 16th of August, and it looks to be a level that's going to be tested very soon this week, right? Perhaps maybe as soon as today, or maybe by tomorrow we may see this swing high resistance being tested very strongly, and we may even see this bullish breakout continue, or this bullish momentum continue, and see dollar yen make another bullish break above a prior resistance, right? Let's pull up right, and then we can also probably run a Fibonacci retracement, right, from this swing high here, right? There's a nice swing high taking place on 3rd of July, going down to this swing low here on the 16th of September, right? Let's pull up all the fibs, right? Okay, we don't see any of the Fibonacci retracement levels align well with the for the first resistance and pivot. That's fine, right? Remember, never force the Fibonacci level onto our analysis unless it's necessary, right? You can see here, if the Fibonacci levels do not align well with like a predefined resistance or support level, right, then do not force the Fibonacci analysis onto the charts, right? We are going to be trying to look for actually resistance levels first, right? Resistance levels or overlap levels such as these first, and then if we do see a Fibonacci retracement accompanying that that price zone, then of course we'll be using it. Like for example, in the first resistance, we're actually using a Fibonacci extension. So we found this extension by running a retracement from here, this swing high on the 15th of August, going down to this swing low here on the 16th of September. We can see that the Fibonacci extension at 161% sits pretty close to this first resistance. The first resistance at 154.84 is a nice overlap resistance. Previously, it functioned as a nice swing low support here, or pullback support here on 5th of June. Where actually you can look at it here, it's like a nice double bottom here for the dollar yen before bouncing higher. So this took place on 15th of May, 6th of June, This was previously a support level here, and then after which it proceeded to function as resistance on 30th of July, thus creating a very nice overlap level here. So that's how the first resistance at 154.84 has been identified. Right, it's actually a nice overlap resistance, and I should be actually stretching it all the way back here. Right, we can see much more clearly now. A very nice overlap resistance on 30th of July, and previously functioning as a support here. Nice double bottom here on 15th of May and the 4th of June. Right, so these are the key levels for the dollar yen. Right, take note, this pivot level here is going to be tested quite significantly this week, and we may see another bullish breakout take place through this pivot level at 149.27. All right, now let's take a look at the Aussie. All right, hi Nick, yeah, great to see you as well. Of course, definitely we'll have time for gold as well. Once we take a look at the Aussie and the Kiwi, we'll move on over to the commodities, touch on gold, crude oil, of course, and we'll take a look at the indices, and we'll take a look at Bitcoin as well. All right, no worries. Yeah, definitely we'll be covering gold as well. All right, so take note, these are the key levels for the dollar yen. Let's move on over to the Aussie. Right, Aussie and cable as well. Right, pretty similar market structure for the euro as well. Right, we can see all of these currency pairs previously making a series of higher highs, higher lows, right, and also trading within a nice bullish channel as well. Right, so here we see the Aussie breaking out of this bullish channel last week. Right, it's already broken out of this level last Friday, breaking underneath the lower trend line of this bullish channel here. So I've identified the pivot at 67.40. Right, this is an overlap support. Right, previously this level functioned as a little resistance here, like on Friday 6th of September, after which it proceeded to function as support on 18th and 19th of September. So this creates a nice overlap level. Right, so this is a nice overlap support that has been identified as the pivot at 67.40. Now this level here is also accompanied by Fibonacci retracement at 61.8%. Right, let me try and make this retracement level a little bit more visible. Is this a bit better? Okay, maybe this is a little bit better here. So we can see this overlap support level at 67.40 is also accompanied by a Fibonacci retracement at 61.8%. So we found this retracement starting from here, from this swing low on the 11th of September, going up to the swing high here on the 30th of September. Right, we can see the 61.8% retracement level aligned pretty well with overlap support, which is the pivot. Now, first resistance is very clear. Right, is this swing high that has taken place at the beginning of last week, and that's at around 69.13. And a little bit below, we can see the Aussie making a nice swing low support here. Right, a nice swing low support taking place here on 11th of September. Right, and this has been identified as the first support. We can also see that this swing low support at 66.52 is also accompanied by 50% Fibonacci retracement. Now this retracement level was found starting from this swing low here on 5th of August, going up to the swing high, of course, on the 30th of September. So we can see a 50% retracement level aligned very well with the swing low that took place on 11th of September. Right, so take note, these are the keys, support and resistance levels for the Aussie. And of course, if we expect demand for the dollar to remain strong for the first couple of days, right? Remember, inflation data, CPI data drops on Thursday, PPI data on Friday. We also have FOMC minute, the meetings of the FOMC minutes being released on Wednesday, right? So the second half of the week, we have a pretty strong, there's a high probability, right? We can see the dollar coming under selling pressures, right? Especially if the minutes convey a dovish communication, and also if we do see inflationary pressures in the US dissipate even further, right? If we see softer data for CPI and PPI on Thursday and Friday, we are likely to see the dollar come under pressure, and that means we are likely to see the Aussie, right, perhaps stabilize around the pivot by then and maybe stage a minor rebound, right? So take note, first couple of days, the Aussie as well is likely to be under pressure, and it's going to potentially drop down towards this pivot level at 67.40, which has been identified as an overlap support that's accompanied by the 61.8% Fibonacci retracement, right? And in the second half of the week, and if we do see inflation continuing to cool in America, then of course we could potentially see the Aussie stabilize and stage a minor rebound, right? So these are the key levels for the Aussie. Let me see if there's any other retracement levels. Nope, that's fine, right? So this is the Aussie. And of course, let's take a quick look at the Kiwi as well, right? We've got the RBNZ coming up on Wednesday, 9th of October, right? Where they're looking to cut their official cash rate from 5.25% down to 4.75%, right? They're looking to make a big 50 basis point cut after moving ahead with a 25 basis point cut at the previous meeting. So the Kiwi is likely to come under significant selling pressures on Wednesday, right? If we do see that 50 basis point rate cut take place, and also of course if we do see uh, uh, a statement that's going to communicate pretty dovish outlook, right? We're likely to see the Kiwi come under significant selling pressure. So take notice, markets are expecting a big 50 basis point cut in official cash rate, and if we do see a statement that's going to convey further dovish outlook on future monetary policy action, right, we can definitely expect the Kiwi to come under significant selling pressures this week, right? So with that, right, I see a nice support level for the Kiwi at 61.27, right? This level here previously functioned as a nice pullback support on 23rd of August, and then a nice swing low support here taking place on 11th of September. So this is a pretty strong support level here that's also accompanied by the 50% Fibonacci retracement, right? So we found this retracement, of course, from this swing low here that occurred on 5th of August and ending up here with this swing high on 30th of September. We can see the 50% retracement accompanying this pullback level at 61.27, right? So there's a strong support zone for the Kiwi around this level here. Right, so take note, Kiwi is likely to be under pressure in the first couple of days, right? Because demand for the dollar is going to could remain strong, and so on Wednesday we may see further bearish momentum for this currency pair, right? Especially if we do see that 50 basis point rate cut take place, right? So take note, the Kiwi could be under significant selling pressures this week, and it could be one of the worst performing majors as well, right? So a little bit below at 60.36, there's a nice little support level taking place here, right? When the Kiwi gapped lower on Monday, 19th of August, it gapped lower on this day, but it found support at 60.36 before staging a very strong bounce, right? You can see here this little pullback level is at 60.36. It's also accompanied by a Fibonacci retracement at 61.8%. So pretty decent support level here for the Kiwi, and of course as a resistance, there's a nice overlap resistance here at 62.60. This was previously a nice swing high resistance that occurred on the 29th of August, after which it proceeded to function as support here on 25th of September, thus creating a nice overlap level here, right? So this overlap level got taken out last week, right? This was previously a nice overlap support that got taken out last week, which now can potentially function as overlap resistance at 62.60. Right, so the key levels for the Kiwi here. Right now, let's touch on gold. Right, XAU USD is an instrument that tracks spot gold futures, and we can see here, like, let's zoom in a little bit. All right, first of all, we can see of course gold demand for gold being very strong, and if you look at it on a weekly time frame, we can see this bullish momentum is actually very strong as well. We see it of course not going up in a straight line pretty much, but you can see since October of 2023, right, gold prices really have skyrocketed, making new intraday highs over the last year or so, right? And just as recently as last week, it made a new intraday all-time high, and that was at $2,685.54. So this level here, this dotted resistance level here, is the latest intraday all-time high for spot gold prices, and that took place on Thursday, 26th of September, right? So you can see here it continues to trade in a nice bullish channel as well, right? We see a few touches to the lower trend line of the bullish channel, and of course a couple of touches to the upper trend line here, right, highlighting the bullish momentum as well, right? Very strong bullish momentum for this commodity. Now, this level at $2,631, right, has functioned as support from as a support from Monday 30th of September, and we see a nice swing low support, pullback support taking place, right? And this is a level that gold prices bounced off last Friday as well, right? Last Friday, you can see here it bounced off this level as well, right? And we can see there's a 23.6% Fibonacci retracement that accompanies this little pullback level as well. So that's how the first support for gold has been identified. Right, so we found this 23.6% retracement starting from here, this low on the 4th of September, going up to the intraday all-time high, that's on 26th of September. We can see the 23.6% retracement aligned pretty well with the first support here. Now, with gold trading quite close to its intraday all-time high, right, we've relied on Fibonacci tools such as Fibonacci extension levels to help us identify potential resistance barriers. Remember, beyond this intraday all-time high for spot gold prices, right, there's no other level that we can reference, right? We don't have a swing high resistance such as this level here on 17th of July, right, or even this swing high resistance on 22nd of May, right? There's nothing that we can reference from the past. So in such a scenario, we have to rely on Fibonacci tools. In this case, we've run a retracement from the intraday all-time high on 26th of September, going down to this low here on the 30th of September. So we are using this retracement level, or rather we're using this retracement to help us identify key extensions at 127% and 161%. So this is how the pivot and the first resistance has been identified. Right, so we can see here this extension levels has helped us to identify potential resistance barriers. So we could see gold prices remain supported as well, and if it does break above its intraday all-time high at $2,685.57, right, it could make a run towards this pivot level at 2,700, which is a Fibonacci extension at 127%. Right, and of course a little higher up, another potential resistance barrier has been identified at 2,723, and that's by this Fibonacci extension at 161%. Right, maybe we can also run a Fibonacci projection. Like, let's try something out, starting from this low here, 0.1, 18th of September, going up to 0.2, 26th of September, and ending at 0.3, and that's at 30th of September. Let's take a look at all the key projection levels. Right, we can see 61.8% Fibonacci projection sitting quite close to the pivot, and also we see the 78.6% projection sitting quite close to this prior first resistance as well. So this is they're not exactly lined up at the same level, but they're pretty close enough, right? And I would like to highlight this as a zone rather than an individual level here. So we've identified two strong resistance zones, but with using a combination of the Fibonacci projections and the Fibonacci extensions here. Right, so these are key resistance barriers that we have identified via a combination of Fibonacci extensions and Fibonacci projections. And of course, if gold prices continue to climb even higher, right, then of course we can then use the Fibonacci projection at 100% as the next potential resistance barrier. But for now, right, these two levels here are more than sufficient to identify a potential pivot and a potential resistance for spot gold prices here. Right, so with gold bouncing off the first support quite nicely last Friday, right, we could see this commodity or this precious metal remain elevated and perhaps make another attempt to break above this intraday high at 2,685. All right, let's take a look at crude oil as well. Right, XTI USD is the instrument that tracks WTI crude oil futures, and we can see this commodity as well breaking out of a pretty significant bearish channel as well, right? It was trading in a nice bearish channel since the beginning of July, right? We see a series of lower highs, lower lows, right? Okay, this is not the best bearish channel actually. Yeah, it's not a very good bearish channel. It's more of a descending trend line. They got taken out last week, right? It's a very nice descending trend line. They got taken out last week, right? Last Thursday, seeing very strong bullish momentum for crude prices, right? Not only did it break out of an overlap resistance, right? We can see here this level at $72.73. Previously functioned as a nice swing low support on 4th of June, another swing low support on the 5th of August, and then swing low support once more on 21st of August. And this was previously a very significant multi-swing low support, which finally got broken on Thursday, Tuesday, 3rd of September, and then after which it proceeded to function as resistance on 24th of September. So when this happens here, it creates a nice overlap level. So this level at $72.73 was previously functioning as a nice overlap resistance, and then that got taken out last Thursday. So this overlap resistance got taken out last Thursday, and then on Friday we see it break above, a clean break above the descending trend line as well. So very strong bullish momentum, a bullish move, a bullish reversal in crude prices as well. Right, so what was previously an overlap resistance can now be used as support. So that's how the first support at $72.73 has been identified, and the pivot level here at $78.08. It's a nice swing high resistance that occurred on Tuesday, 27th of August, and the first resistance at $80.03 is another swing high resistance that has taken place on 13th of August, right? So we can see here we're using swing high resistances to identify potential resistance of barriers, right? We have identified a potential pivot at $78.08 and the first major resistance at $80.03, right? So if demand for crude oil continues to remain strong, right, it's quite likely going to head up towards this pivot level here, right, where you can use it as a potential take profit target as well. So any long trades that you may have for XTI USD, right, identifying a potential price take profit target at around the pivot would be a suitable area to do so. Of course, we can also see it's accompanied by a 61.8% Fibonacci retracement, right? So this retracement level was found starting from here, this swing high on the 5th of July, going down to this swing low here on the 10th of September, right? We can see the 61.8% Fibonacci retracement accompanying this pivot pretty well with this swing high resistance, right, which is this pivot, and also we see a 78.6% Fibonacci retracement sitting pretty close to the first resistance as well, right? So pretty significant resistance areas that are accompanied by Fibonacci retracements as well, right? So this could be potentially a strong barrier here for XTI USD. So identifying a potential take profit target close to the 61.8% Fibonacci retracement would probably be a suitable area to do so, right? Okay, let's take a look. Right, okay, we've covered most of your requests as well. All right, awesome, very great to see the requests come in. All right, so we've covered the commodities as well. Let's take a look at the indices. We'll cover DE40 and look at US 500, right? DE40 is the instrument that tracks the DAX futures, and we can see this instrument rebounding very strongly last Friday, 4th of October, right? We see it here rebound of this little pullback level here. So previously on 25th of September, this level at 18,922 functioned as a pretty decent pullback support on Wednesday, 25th of September, and it looks to have found support once more last Friday at this level here. We can also see that this little pullback support level is accompanied by a 38.2% Fibonacci retracement, right? So this retracement was found starting from here, right, this swing low on 10th of September, going up to this swing high here on 27th of September. This high here is the current intraday all-time high for DAX, right? And that's how the 38.2% Fibonacci retracement was found. So the DAX looks to have reversed off this pullback level here quite nicely last Friday, and we can expect it to rise up towards the pivot level here. So the pivot level at 19,400, right, is a swing high resistance that sits close to the intraday all-time high at 19,491, right? So very strong, potentially strong resistance area here, right, which can be used as a potential price target, right, for any long trades for DAX. Now, with the DAX trade making an intraday all-time high on Friday, 27th of September. In this case, right, to identify the next resistance level or potential resistance barrier, we have used a Fibonacci projection at 78.6%, right? To find this projection level, we started from here, 0.1, from this swing low on 5th of August, going up to 0.2, 3rd of September, and ending with this swing low here on 10th of September here. So we have used a 61.8% Fibonacci projection and 78.6% as well. We can see the 61.8% projection level sit pretty well with the swing high resistance, which is the pivot, and we can also see the 78.6% projection has identified another additional resistance barrier here at 19,742. Right, we may also have a Fibonacci, yes, we also have a Fibonacci retracement here. Right, we've run this retracement. Oh, hang on. There we go. We've run this retracement here from this high on 3rd of September going down to this low on the 10th of September. We are using the 161.8% extension level to help add further significance to this resistance barrier here. So we can see this pivot level here at 19,400 is not only a swing high resistance, it's also accompanied by a 61.8% Fibonacci projection and a 161.8% Fibonacci extension, right? So pretty strong resistance barrier identified by these two Fibonacci levels here, right? So once again, this could be a potentially strong barrier here. So identifying your price target here, right, for any long trades for DEX, right, any potential long trades for DEX, identifying the price target at around the pivot would be a suitable area to do so. All right, let's take a look at we've covered the 40, let's take a look at US 500. And right, similar movement for US 500 as well, rebounding strongly last Friday, right? Remember last Friday we had non-farm payrolls, right, which seems to suggest pretty decent rebound in job creation, right? But although take note, we are continuing to see quite strong downward revisions for prior months as well, right? But based on the latest figure, right, it looks like job creation in the US has sort of stabilized and calmed markets down as well, right? So that's why we saw demand for the dollar pick up quite strongly last week or last Friday, and also we saw equity markets stabilize as well, right? So looking at the first support at 5,669, this level here was a nice swing high resistance, right? We've previously functioned as a nice swing high resistance in mid-July 2024. It even functioned as resistance, you can argue, here once more at the beginning of September, after which it's proceeded to function as support. So this level at 5,669 is a nice overlap support level, right? And we can see that it's also accompanied by a Fibonacci retracement as well. And we started this retracement from this swing low on the 6th of September, ending with the high on the 26th of September. So, right, this high here is the latest intraday all-time high for US 500, and we can see that at 23.6% Fibonacci retracement sits pretty well with the first support. Right, see 23.6% Fibonacci retracement sitting pretty well with the first support. Now with equity markets rebounding quite strongly last Friday, right, the pivot for US 500 has been identified at 5,831. This level here has been identified by Fibonacci projection at 78.6% and a Fibonacci extension at 161%. So let's start with the projection first. Right, projection is very clear, starting with 0.1, 5th of August, going up to 0.2, 3rd of September, and ending at 0.3, which is the 6th of September. We can see that 78.6% projection sits at around 5,831, and 100% projection sits at about 5,951. Now, when we also run a Fibonacci extension, we found this extension at 161% by running a retracement from here, 3rd of September down to 6th of September. We can see the Fibonacci extension at 161% aligns pretty close with the 78.6% projection. So this highlights a pretty strong resistance barrier, which we have identified as the pivot. Right, so if US 500 continues to climb higher, you can identify a potential take profit target at around this pivot level at 5,831, which has been identified by two Fibonacci levels, the projection at 78.6% and an extension at 161.8%. Right, so take note, these are the key levels for US 500 as well. Right, before we move on, I'm going to launch a poll as well. Right, truly appreciate it if you guys can give your feedback with regards to today's webinar. Right, launch the poll as well, and yeah, and also thanks for the smashing the like button as well, right? Truly appreciate it, right? Keep smashing the likes buttons as well, the like button as well, and also looking forward to your feedback as well. All right, okay, then let's just continue with the analysis, right? We can move on over to Bitcoin as well. Take a look at Bitcoin, and then we'll wrap things up for today's session. All right, okay, taking a look at Bitcoin here, it's currently trading around 60,600, right? Last week it looks to have stabilized at around 60,500 and has staged a pretty decent rebound over the weekend as well. So this level at 60,529, right, is a nice overlap support, right? Previously it functioned as resistance here on in mid-September, and then it functioned as nice support at the beginning of October as well. So this creates a nice overlap level, which has been identified as the first support. So we see Bitcoin reversing off this overlap support quite nicely on Friday and has rebounded higher over the weekend as well. Right, so nice overlap support at 60,529, and this coin could quite likely rise up towards this pivot level here. The pivot level at 65,783 has been identified as a swing high resistance that has taken place on Saturday, 28th of September. Now this swing high resistance is also accompanied by a Fibonacci retracement at 78.6%. So we found this retracement starting from here, this swing high on the 29th of July, going down to this swing low on the 5th of August. You can see 78.6% aligned pretty well with this swing high resistance at the pivot. Now, the first support at 60,530 is also having a 50% retracement level. So we found this retracement by running from starting from here, this swing low on the 6th of September, going up to this swing high on the 27th of September. We can see the wicks here on 1st to 3rd of October dropping pretty low, dropping quite close to the 50% Fibonacci retracement as well. So it highlighting this as a zone here, pretty strong support zone. And of course, the first resistance at 68,388 is a multi-swing high resistance, right? The first swing high taking place here on 21st of July, and the second swing high taking place here on the 29th of July. So this is almost like a double top before Bitcoin dropped very sharply in the beginning of August here. So we've used a multi-swing high resistance at 68,388 in the identification of the first resistance. Right, great to see the feedback coming as well, right? Truly appreciate it for those of you who have taken part in the poll, and as well as for liking the page as well. All right, thanks so much. Right, so we can see here, right, Bitcoin looks to have stabilized at around 60,530 last week and has rebounded, staged a nice rebound over the weekend as well. So this coin could quite likely continue climbing higher this week, and you can then use this pivot level at 65,780 as a potential take profit target as well, right? As a potential price target, because this is a significant swing high resistance that's accompanied by a 78.6% Fibonacci retracement. Right, okay, let's see. Okay, so I think we've covered pretty much everything this week, right? We of course taken a look at the dollar index, most of the major currency pairs, commodities, a couple of the indices. We got Bitcoin as well, right? Okay, then let's just summarize things before we wrap up today's session, right? So this is the economic calendar for this week, right? Quite a few things going on, right? We've got an RBNZ rate statement that's out on Wednesday, 9th of October. That's at 1 a.m. GMT time, right? We're expecting this central bank to make a 50 basis point cut, right? Remember, at the previous meeting, the RBNZ cut by 25 basis points to bring it down to 5.25%. This week, however, they're looking to make a much larger cut. That's going to be as big as 50 basis points to bring it down to 4.75%. So if we do see this large rate cut take place, and of course we do see a statement that's going to convey that could convey pretty dovish communication or dovish outlook on future monetary policy action, we can expect the Kiwi to come under significant selling pressures on Wednesday, 9th of October, right? Remember, demand for the US dollar looked strong last week, especially with slightly better than expected non-farm payrolls that were released on Friday. So we could see demand for the US dollar remain strong for the first couple of days. However, we have the FOMC meeting minutes released on Wednesday, 9th of October. We have US CPI out on Thursday and US PPI out on Friday, right? So in the second half of the week, we could potentially see the dollar come under pressure, right? We have fundamental catalysts such as potential cooler inflation for CPI and PPI, right? If we do see both CPI and PPI continue to cool even further, and if we see a meeting minutes that's going to convey further dovish rhetoric, we can probably expect the US dollar to come under selling pressures, and that means dollar index, which had rebounded quite strongly, right? If you look at dollar index, it has rebounded quite strongly here. We may see it stall in the second half of the week. So remember, demand for the dollar could remain strong as on Monday and Tuesday, right? Demand for the dollar could remain strong on Monday and Tuesday, pushing it up towards this pivot level here at 103.24. This is a nice overlap resistance that's accompanied by a 50% Fibonacci retracement. However, in the second half of the week, when we have the minutes of the FOMC meeting being released, along with CPI and PPI data, we could see the dollar come under significant selling pressures, and it could potentially stall around the pivot if it has reached that level by then, and perhaps start to pull back a little bit. So take note, it's going to quite likely going to be a tale of two stories for the dollar index, right? Monday, Tuesday, we may see this index continue to push higher, and in the second half of the week, should the data continue to show inflation cooling even further in the US, right, we are likely to see the dollar index perhaps stall and maybe reverse to slight lower, right? Okay, so that's all I've got for this week, right? Thanks everyone for tuning in to today's pre-market live analysis session brought to you by IC Markets. Do look out for all upcoming webinars for the rest of this week, right? We've got a combination of live analysis, educational topics, as well as webinars in Thai and Bahasa as well. All right, thanks everyone for tuning in to today's session, right? Have a great trading week, and catch you all at the next webinar. All right, thanks everyone. Take care, and wish you all a good start to the new trading week. All right, thanks everyone for tuning in, and yeah, catch you all soon.